we dodged a bullet last night. It could have been the end of the world, or at least the end of the markets, but instead, Nvidia reported their results, and the results exceeded the expectations. The revenue is $57 billion for one quarter. Okay, we're going to dig into the results today, but the results were absolutely astounding. So now what's happening is we're getting a bounce in Bitcoin, not a big bounce, a small bounce, and we're getting a bounce in Nvidia and in the tech stocks and stuff like that. So if you look at the Nvidia stock price looks like it's going to open at about $195, which is about 5% up on yesterday. And so with this risk out of the way, one of the big risks for me in crypto is basically out of the way now. And so what I'm starting to do is I'm starting to buy. But I'm not just starting to buy randomly. I've actually built a framework for how I'm going to deploy my capital. And I want to share that framework with you because I think that this framework will really help you today. It's going to show you exactly how I intend to deploy, why I intend to deploy, and I'm going to show you exactly when I'm deploying and actually what I'm buying. So big show today. We got saved from the end of the world. We're here. We'll bring you Crypto Lab and we'll bring you crypto wisdom. Let's do this, guys. Wakey, rise and shine. It's a beautiful day because we could have been destroyed. If Nvidia results went the other way, then I think that the market would have gone down a lot. I don't agree with 𝗕𝗏𝗃 much, but I agree with 𝗕𝗏𝗃 today when he says that if the Nvidia results went the other way, then we could have lost 10 to 15% on the crypto market cap. Guys, I don't know if you saw what happened to 𝗕𝗏𝗃's channel, but YouTube randomly just removed 𝗕𝗏𝗃's channel. Like crazy. He makes amazing videos. He sticks to all their guidelines, and YouTube just randomly removed his video. Just go to his Twitter profile. Help him out. He is one of the best guys in the crypto landscape. And he just retweet his tweets, tag the guys at YouTube, and let's try and get his channel back. Because right now, he's appealed the ban, and it seems like his channel's basically gone forever. They basically said, look, we reviewed the appeal, and we're not going to be reinstating your channel. So, just look at this message. So we've reviewed your channel carefully and confirmed it violates our harmful and dangerous policy. We know that this is probably disappointing news, but it's our job to make sure that YouTube is a safe place for all. He said, how this affects your channel? We won't be putting your channel back on YouTube. This is a guy who's built a business. He's got like 10 people working for him. He's a humble guy. And YouTube just removed his channel. This is worse than what the SEC were doing to crypto in the early days. And you can actually help. And you can help by just going to retweet this and getting YouTube's attention. We've got to get 𝗕𝗏𝗃's channel back. If it means we need to go legal, then we'll support 𝗕𝗏𝗃 in a GoFundMe campaign or in a legal campaign. Banter, I can say right here, right now, Banter will put $50,000 behind it if he needs money to go and take them on. But we've got to stop this attack on crypto creators. I actually also posted an open letter on my Twitter profile, which I think is probably worth reading, and probably worth retweeting. But basically, this letter defines how, even though we've got a great business here at Banter, like I don't sleep at night because I know that any morning I can wake up and my channel can be like absolutely gone. So yeah, if you can help, go and help. Otherwise, let's get on with the alpha. If you are here and you're watching our channel and you're not already subscribed, please subscribe to the channel. It really helps. And if you smash the like button in this video, it helps me because it gives me more energy. And then I get more energy, the more alpha I give. And that's really what I'm intending to do here today. All right, let's get into what actually happened last night. Because as I said, I think we dodged the bullet. Instead of, if Nvidia results went bad, it would have been bad. But instead, Jensen Huang did what he always does, right? And you know how he prepares for his results. I'll show you. Wait, hold on, I gotta show this. It's got to be visual. This is him preparing for his results, and then, bang, he jumps out and he presents his results. And they were incredible results. The analysts were expecting $55 billion, get this, per quarter. $55 billion per quarter. And he gave them $57 billion per quarter. And the best thing about these results, I want to just show you the numbers here. This is Nvidia's history of Q3 earnings from 1999. That's 26 years ago, right? In 1999, in Q3, they had earnings of $97 million. Fast forward to 2025, and look at how these increments have basically changed. You're talking $57 billion. I think in history, this is unprecedented. We've never, ever seen results like this before. But the results are only the first part of the story. The bigger part of the story is that Jensen Huang basically came out and said, if you think that there's an AI bubble here, I've got news for you. Because I think we need to define what a bubble is, because the market is really, really, really scared of an AI bubble. But what is a bubble? A bubble is when you have something that cannot deliver on its promise. When you are selling something that doesn't really have use cases or usage yet, that's a bubble, right? Or like in the old days when we spoke about the internet bubble, it was when the internet couldn't deliver to the expectations that we wanted. That's a bubble. But that's not what's going on here with AI. And that's what Jensen Huang actually came out and said yesterday. He basically reaffirmed or reiterated the fact that there ain't no bubble where he's standing from, right? Why? Because if you look at their orders, they simply cannot keep up with their orders. He said Blackwell cells, which is their GPUs, Blackwell cells are off the charts and cloud GPUs are sold out. Computing demand keeps accelerating and compounding across training and inference, each growing exponentially. We've entered the virtuous cycle of AI. The AI ecosystem is scaling fast with more new foundation model makers, new AI startups across industries. Basically, he's saying, look, we just cannot keep up with the demand. And so if anything, I would say that this is probably the opposite of a bubble, because he's got $500 billion in revenue already lined up for 2026. I think Melton's right here when she says the bubble, if it is a bubble, the bubble hasn't even started yet. Because first, what you've got to do is you've got to be able to fulfill the current demand before we talk about a bubble. A bubble is when you are selling something that is not really there, and then the pin pops the bubble and then the bubble's gone. This is not the case. If anything, it's the other way around. If anything, the one thing that's going to constrict this AI growth is the fact that they don't have enough resources. They don't have enough compute power. They don't have enough electricity, right? What does that mean? It means that people are going to spend. It means that on the one side, tech companies are going to become very capital intensive, because if you want data centers, you need to invest a lot of money. So you're going to need to raise a lot of capital. That is the one side of it. The other side of it says that it's definitely not a bubble, because if it was a bubble, it would be that they had too much power, they'd invested too much, and they're not actually getting the sales. So let's read this. It says 1 year later, the staggering energy shortfall to power the AI revolution rises from 36 gigawatts to 44 gigawatts. At 60 billion per gigawatt, this is a 2.5 trillion in grid funding needed, and excludes the 2 trillion needed to build actual data centers. So if we want to keep up with the AI demand, we need $4.5 trillion. Do you know what happens when $4.5 trillion is put into an economy to stimulate an economy? This can only be a good thing. So what Jensen Huang actually did yesterday was he turned the fears of an AI bubble he went from a AI bubble to AI boom. Not only is this not a bubble, but actually this is going to stimulate the economy so much and requires so much investment that any fears of an AI bubble are basically gone. Now, before he went onto the earnings call, I actually saw him on stage with Elon. And one of the things that they spoke about on stage with Elon, I think this has got something to do with the Saudi Arabia visit to the US, or the US Saudi investment forum. And they're talking about building more data centers.
That, we're doing a 500 megawatt. 500
megawatt.
500 megawatt, yeah.
We're doing 500 megawatts.
So he's building more data centers. He's building more data centers. And it's not only him. Everybody is building more data centers. The constraint is they cannot get enough. And if they cannot get enough, that's the constraint. That's not a bubble. Just while we're speaking about Elon, I've got a good story to tell you guys. So don't know if you guys know, but on the weekend I was in Portugal, and I went to a crypto creators conference, which is organized by some of the exchanges, Bybit and a whole lot of the other partner exchanges. And because I was one of the keynote speakers, we had a dinner afterwards. And actually what they did was they sat me next to Elon Musk's mom. And I sat next to her for like 4 hours at this dinner. Literally, I sat next to Elon Musk's mom, May Musk. And I'll tell you one thing. If you think Elon's impressive, like I know where he gets it from. His mom May Musk is absolutely, absolutely amazing. She was a single parent. She brought up these amazing kids with hardly any money. And I mean, all the kids are overachievers. And she's still, at the age of 77, she's 77 years old. She's still a runway model. She travels the world. She was in Portugal. She was going to Doha. She travels the world, and she's absolutely amazing. To have that energy at 77 is absolutely insane. Kind of got to say that this was like one of the highlights of my conference. Not only that, I don't know if you guys know Naz Daily. So I also spent a lot of time with Naz Daily. What a great guy. What an absolute legend. Yeah, so that was a lot of fun. Anyway, so going back to business. So the Nvidia switch went from taking one of the biggest risks, which I spoke about yesterday on the show. Yesterday I spoke about like 4 big risks or 5 big risks, and one of the biggest risks was the AI bubble popping. The AI bubble ain't popping anytime soon. And what we are starting to see now as a result is that the markets are starting to move. So you look at the Nvidia chart is up probably 4 or 5% in the last 2 days. You look at the Nasdaq's up 1.63 or 1.64% because, again, the Nasdaq was also scared of an AI bubble, and that risk has now been removed. If you look at the Bitcoin chart, I mean, yeah, we've got to bounce, but okay, so we rescued the $90,000 level, but we're still like nowhere near where we should be. And so now we are kind of stuck in this battle, right? And I tweeted about this battle. I think right now there are 2 schools of thought. Either you're in the technical analyst camp or you're in what I call the liquidity cyclist. You can't be both because there are 2 conflicting opinions now in crypto. One is the technical analysis view. If you're a technical analyst, okay, the cycle's over for you guys. Every single technical level in the cycle has basically been broken. Like we know, we spoke about it the other day, the 100,000 psychological level, that's gone. I made a list of them. The 100,000 psychological level is gone. The 50-week SMA is gone. The death cross, we didn't get a bounce. So if you're a technical analyst, then you're on the side of, okay, this cycle has to be finished. If you are a liquidity cyclist, and I would maybe say that that's more like of a fundamental level, then you're looking at this chart and you're going, hold on a second. Doesn't make sense that Bitcoin's going to deviate so much from global liquidity, right? And you're also in the camp of saying that there's more stimulus coming, that Japan's doing $110 billion stimulus, China's doing a big stimulus, the US is talking stimulus for next year, quantitative tightening is ending now on the 1st of December. And so right now, that's the 2 opinions. Because remember, in a market, you've got to have buyers and you've got to have sellers. Obviously, now that the market's going down, the technical analysts, the 4-year cyclists, let's actually break it down into two narratives. 4-year cyclists versus liquidity cyclists. Like that's really what's going on here, right? So if you're a 4-year cyclist, well, all your technical indicators have ticked. If you're a liquidity cyclist, then you're only just starting right now. And in fact, not only are you just starting, but you're expecting a monster bounce. So look, I gotta be honest. I'm kind of torn, but I'm much more in the liquidity cyclist corner. And so the thing is that at some point you want to be deploying capital. If you are a technical cyclist or a 4-year cyclist, then there are levels on the way down where you want to be deploying capital. If you are a liquidity cyclist, then there are other levels where you want to be deploying capital. And I thought the best thing to do here was actually to create a framework. So almost like say, look, when do we actually deploy our money? Because you don't want to deploy it all today because what happens if the market actually carries on going down? So I kind of broke it down into 3 things. And I said, look, if you are a liquidity cyclist and you think the market's going to recover, if you think the market's going to recover, then there are 3 things that you're looking for before you can deploy money into recovery. The first thing you're looking for is capitulation metrics. The second thing that you're looking for is technical metrics. And the third thing that you're looking for is you're looking for the risks to fall out the way, right? So let me try and simplify it for you guys. 3 things before you deploy capital. 1, let the risks get out the way. What are the risks? Well, the first risk that we need to get out the way is this AI bubble risk. That AI bubble risk, I think we can kind of say that after yesterday, the AI bubble risk is kind of gone. And not only is it gone, but it's actually like what's the word? Like they managed to turn it into like a positive. They managed to turn it into a positive. Why? Because Nvidia earnings have become a macro pivot point for the entire market. When Nvidia beats and guides higher, liquidity expectations improve because they need to all this investment, and that therefore everything strengthens, right? Bitcoin responds indirectly but consistently, stabilizing or bouncing within 24 to 72 hours. And the opposite happens when Nvidia reports bad earnings, okay? So that risk is now out the way. Are there any other risks that are coming up? Yes, there is one more risk that is coming up. And that other risk is rate cuts. Remember that we were expecting massive rate cuts and that it was almost a sure thing. Well, it's not a sure thing anymore. In fact, the market is now saying that there's a 68% chance, I keep refreshing this because there's a 72% chance that there's not going to be rate cuts. Why? Very simple. No data, no rate cuts. And now what's happening is that the Bureau of Labor Statistics basically said, look, it will not publish an October employment report, and noted it will incorporate these figures into November report, which is said to be published in December after the FOMC meeting. And so what the market's worried about now is no data, no rate cuts. And that's why the market is getting very, very, very scared. So that's another one of those risks. Are we going to get a rate cut in December? So those are the two risks that are basically on my framework. And how this framework works is it basically says, look, decide what is important to you and how important it actually is, and then allocate how much of your stash you're going to allocate to that event. And when that layer or level flips, then you've got, then start deploying. So as I said, in terms of risks, there's two things that I'm looking at. One was the AI bubble, and one is the rate cuts. The AI bubble for me is now mitigated. That gives me the license to deploy 20% of my capital. Rate cuts, let's wait to see if there are rate cuts, and I'm going to hold 20% of my capital around the rate cut thing. Then I'm looking at the second type of metric, which is a capitulation metric. So remember, you're looking for three things: capitulation, risk, and technical metrics. From a capitulation point of view, the first thing I'm looking at is, what is the fear and greed, and has it been in the right place for long enough? And we're still at, we're at 11 yesterday, we're still at 11. This is good for me. For me, if I look at that and I combine it with the short-term holders, which are underwater, which is a capitulation metric. Here are the short-term holders. And when the short-term holders are underwater, that's a capitulation metric. When I look at a combination of all the other capitulation metrics, look at that. We're higher than we were when it was with FTX. More capitulations than FTX. So another capitulation metrics is the Coinbase discount. Now, what does that mean? It means that people are dumping, Americans are dumping on Coinbase, institutions are dumping on Coinbase faster than the rest of the world are dumping. And therefore, it's creating a capitulation metric. And so what I've done is I've listed them and I said, look, the fear and greed, which for me is a massive indicator, I said, if the fear and greed stays under 15 for a long period of time, and I define long period of time as like a week, then I'm going to deploy 20% of my cash. That's triggered. So 40% of my cash is now ready to be deployed because that's triggered and that's triggered. The next thing is the on-chain capitulation metrics. It's on-chain, we've capitulated. So 50% of my capital is going to be deployed. The Coinbase thing is cool, but it's not a big metric for me. So I'm not going to actually allocate even if it actually flips, right? That for me is just something I'm looking at. The next thing that I'm looking at is I'm looking at the charts and I'm saying, okay, what are the technical levels that I'm looking at to be deploying? So I'm saying, look, if we can get a bounce off the death cross, then I'll deploy 10% of my capital. If we can reclaim the 50-week SMA, I'm going to deploy 20% of my capital. If we have rate cuts, I'm going to deploy 20% of my capital. If we have an RSI moving upwards, remember I said to you, the RSI has to bounce off 45. So if we go to Bitcoin and we do the RSI over here, so let's go to Bitcoin and do the RSI here. Here it is. So you see, I said to you, it has to bounce off that 45 level in a bull market. Otherwise, we'll just have to accept the fact that it's actually a bear market. Now, again, we're below the 45. We're at 38. Okay, we're at 38. We have to bounce. If we bounce, then I'm going to say, hold on. Okay, my technical levels are validated. and therefore I can deploy my capital. The idea is not that you copy me blindly. The idea is that you create your own framework of how important things are to you and when you're going to be deploying your capital, because otherwise you kind of have no plan. And if you have no plan, and if this is a correction, you may miss the biggest opportunity of your life, because it could play out like this, right? We could be, I don't know, we could be somewhere here, right? And if you don't deploy somewhere over here, you could miss this part of the cycle, right? If the cycle's over, that's cool, because what you'll see is that most of these won't reclaim, right? So if the cycle's over, then that won't reclaim, that won't reclaim, that won't reclaim. You've got 30% of your capital in your pocket. If the rate cuts are delayed, that's cool. So that means that the market will probably go down, and you've saved yourself another 20% into that you'll have. So you've got 50% of your cash still left to deploy. But if you have a framework and you trade with rules, you won't get destroyed by fear and greed. You won't get destroyed by emotion. And that's what I wanted to show you. So I'm deploying about 40 to 50% of my capital. I may be wrong. And hell, if I'm wrong, I've got 50% that I can still deploy later when the other things actually start to happen, right? And again, this is not a fixed thing. It can be dynamic. You can keep adding things if there's new things happening there. But for me, this is the framework that I've built. Let me know what you think of the framework, and let me know if you want to, or if you're going to apply some kind of framework. I think it's a great idea. I'm also glad that now I can kind of really I've actually put down what's worrying me and what would make me feel positive. And as soon as those things trigger, then I've got like a checkpoint to say, okay, well, you said this is going to happen. Now you better start deploying, right? And that's exactly what a framework like this is actually for. And I think it's one of the smartest things that you can actually do right now. So listen, you make your own framework. I will leave a link to this framework in the description so that you guys can download this link. Also, there are some other links in the description which we need to talk about. One is Black Friday. So for front runners for Black Friday, remember I said to you, we're not really, I wasn't really keen on doing Black Friday. We're only doing 1,000 new members, right? Because the problem is we want to keep the group intimate, and we want to be able to respond to everyone and stuff like that. And you can't do that when there's lots of people. We're only taking in 1,000. Yesterday, about 350, between yesterday and Monday, about 350 people actually signed up. So there's a link here. Click the link. Get in. You're paying less than $99 a month for something that usually costs $200, okay? Just do it, because I'm never going to do this again. I'm never going to discount front runners again to these levels. You're literally getting 50% off. You're paying $1199 for the year. There's only going to be 1,000 spaces. 350 of those spaces are gone. And really, there's everything that you want in there, from quants to traders to insiders. Everybody is in there. And the people in front runners are actually making money at the moment, even with a market like this. The other very cool thing that I want to show you is one of our sponsors. And I don't really like talking a lot about sponsors unless I think they're absolutely fucking amazing. So you know that I keep calling up investing.com as one of the websites where I always show you unemployment rates and stuff like that. So they've become one of our partners, and we're very proud of this partnership because they've got amazing things that that you can actually use, right? So if I want to show you one or two of the features that you can actually use. I've only started playing with this tool today, literally. And one of the things that they've got is they've actually got an AI called Warren AI. So you see this tab here, which is Warren AI. It's only for, I think, the paid members. But Warren AI actually helps you do a lot of research on stocks and crypto things. So you can say something like, summarize the Nvidia results and tell me if I should buy the stock. So when you do that, you see that this is obviously an AI that's trained on all of their database, and it's going to take quite a while. So okay, you see, I don't think my pro subscription's yet in. So it's analyzing the earnings calls, the metrics, and it's telling you exactly what it's doing, and then it basically summarizes this, right? So you can get everything that you want using their Warren AI, and it gives you the bull case and the bear case. The other feature that it's got, and I'm not going to show you this feature now, but basically what it does is it gives you, you can basically ask it to look at charts for you, right? So you can ask it to say, hey, look at this chart and tell me what this chart actually means. And it actually deciphers the investing.com AI actually deciphers the charts for you, which is absolutely, I think, amazing. Anyway, there's a link below, investing.com. Go and check it out. They've got some paid memberships, non-paid memberships. I'm still testing it out. I only got it today. But what I have tested out, it was really, really, really amazing. All right, chaps. I will see you guys again tomorrow. Tomorrow there's a trading competition. It's Friday tomorrow, right? Tomorrow, a trading competition. Banter Royale tomorrow. Banter Royale. So I'll see you again then. Until then, trade well, my friends.